I think Uber would have been much happier in a world where there were 10, 20, 30 providers of autonomous vehicle fleets. Then they wouldn't be doing this.
I'm not saying these are insurmountable problems. I'm saying they're existential and they're serious.
We've got 3,000 people, 2,000 of whom have joined the company in the past 12 months, just working on whatever it is that they feel is a smart thing to work on. That's why we have 4.0 and 0.1 and 0.3, 4.1 and ChatGPT Agent and Deep Research and Operator and Codex.
You're listening to the Startup Podcast. This is a Reacts episode.
Hi, I'm Chris Saad.
And I'm Yaniv Bernstein.
And on today's show, Uber partners with Lucid and Nuro and, in some ways, NVIDIA to build their own RoboTaxi fleet. OpenAI launches ChatGPT Agent. And we discuss OpenAI's culture, what's going on under the hood, and what can you learn about it as an operator. All that and much, much more on today's show. Stay tuned right after the break.
Today's episode of the Startup Podcast is brought to you by .tech domains. One thing about starting your startup that should be easy but isn't is naming it. Why is it so hard? Because all the good .com domain names are taken. So you end up doing something silly like misspelling it or adding random prefixes or suffixes. No more. Your domain shows your focus and intent, so you should make it sharp, clean, and unmistakably tech with a .tech domain. Head to get.tech/TSP or a registrar like GoDaddy to grab your .tech domain today. That's www.get.tech/TSP for the Startup Podcast.
All right, for our first topic, we want to talk about Uber partnering with Lucid and Nuro Robotics to build and deliver and operate RoboTaxis. Apparently, the deal is such that Nuro, which is a provider of self-driving tech, is partnering with Lucid to provide them that tech for their cars, and they will be fitted at the production line, on the production line in the factory. And then Uber is investing in Nuro and buying the Lucid cars. Apparently, they're starting with a fleet of 20,000 cars. So the deal is between Nuro, Lucid, and Uber. Uber, of course, provides the network. They're Uber. Lucid is a pretty well-known EV manufacturer. They have some amount of volume. They're not totally newbies. There are quite a lot of cars on the road. They're probably not as big as Tesla or BYD or those guys. And Nuro is a startup. They've been doing actually food delivery apparently for quite a while, quite a few years, and decided to pivot to being kind of OEM white label technology providers. Underneath them actually is NVIDIA. They're using the NVIDIA Thor SoC, a system on a chip. And so it really is an NVIDIA-powered Nuro technology baked into the Lucid cars and purchased by and operated by Uber. Uber is going to buy initially 20,000 of these. They're investing in Nuro, taking an equity stake, and they're going to be rolling them out in pretty short order. Now, of course, this comes in the face of Waymo, Tesla. Tesla hasn't done anything, but Waymo's real RoboTaxi service, Tesla's rumored bullshit Elon Musk ambition that has not done anything actually about, and Zoosk and other RoboTaxi players all coming in to compete with Uber. This is really interesting, right? Uber has historically tried to be asset light. They have owned assets, but not that many. They have had their own autonomous vehicle department for a while there. While I was there, the ATG, Advanced Technologies Group, they were trying to build self-driving cars under Travis. That got nixed under Dara and his effort to go public and go profitable. Travis was once fond of saying that RoboTaxis, autonomous driving, was existential to Uber, an existential threat, and that we needed to nail down ATG. Many saw that as a strategic misstep to cut that department. I'm sure there were very real pressures to get to profitability or get to break even and get to public markets. But it has been a big strategic question for Uber, and this is, I guess, part of their answer. It's an answer they needed to have, and a partnership they need to have, and I imagine part of a mix of things they're going to try to do. Dara is very much a coalition builder. He's inviting everybody onto the network. He's saying, hey, we can get you demand, put your autonomous vehicles on us. But so far, Tesla has demurred. Waymo is sort of, half in, half out, and they need their own proprietary supply that they can control. Yaniv, what do you make of this?
Just so I understand, is Uber actually owning the assets? Is that the idea here, that they'll be owning the vehicles?
Yeah, my understanding is they're investing in Nuro and they are paying Lucid for these vehicles. They're buying them. There might be some clever, financing mechanism going on
Sure.
underneath. Uber is very clever about creating holding companies and whatever, but at the end of the day, they're making these assets happen. They're under Uber's control.
So that's definitely a departure, as you noted, Chris. Uber has always been asset light. The magic of Uber is they never owned anything, right? They just provided the
That
distribution.
is a little overstated. Uber has owned things from bikes through Jump and to cars in some cases, but yes, majority asset light.
That's right. So the way I'd view this actually, Chris, I'd be interested in your thoughts, is as a hedge, right? Because like you said, at the moment, I would consider Uber and Waymo to be maybe frenemies, is how I'd think about it. Waymo have a booking app that competes with Uber, but they don't have the same liquidity as Uber, right? All they have is their autonomous vehicles. Uber have the network and they have access to Waymo, but as you said, they're worried a bit about having a dependency on Waymo. Now, the reason I think it's a hedge is because I think ultimately Uber and Waymo are a great combination. One of the financial challenges of owning a fleet of RoboTaxis, as Waymo does, is the problem of cyclical demand, right? So imagine over the course of a 24-hour period, right? You have peaks and troughs, same as traffic, right? You have peak hour, you have times when things are underused. And what that means is you have a situation, if you have a fleet of vehicles where either you massively over provision to meet the peak, in which case your vehicles are being underutilized and that really affects your cost structure, or you don't have enough vehicles to meet the peak, in which case you don't have enough vehicles to meet the peak and your customers are not very happy with you. One of Uber's many clever things, of course, Chris, was surge pricing, which was actually a way of elastically growing and shrinking, I guess, the size of the fleet over time. But that's something you can only do if you do not own the fleet yourself. Another bit of genius of Uber's asset light model. So really, the way you'd sort of think about what's the future of ride sharing is you have a base load of autonomous vehicles that kind of roughly matches the lowest demand of the day. Like, okay, these cars can be operating 24 hours a day or close to it, right? And then you need ride sharing, like classic driver owned vehicles that are elastically available to meet periods of greater demand. So, in other words, Waymo's economics on their own are not that great. Uber's economics on their own are not that great because robotaxis, obviously, over time, should be cheaper to operate than ride sharing with a driver. So, really, these things go together. I would say that this is an expensive hedge, meaning Uber does not want to be beholden to Waymo, but ultimately they're probably better off with Waymo. And yes, Tesla's challenges, of course, show that getting things right with autonomous vehicles and being able to operate in many markets is actually really difficult. And Waymo is currently the only player there. So I think this is like Uber saying, maybe we shouldn't have disassembled ATG. Maybe that was a smart hedge and we're going to bring it back. But I still see the future as being Uber plus Waymo.
Yeah, you mentioned they're frenemies. I would describe it as a marriage of convenience or an open marriage. Waymo is encouraged, welcome on the Uber platform, and Waymo has its own thing going on with its primary relationship being its own app. Dara has openly invited Elon Musk to make Teslas available on the Uber network. He's basically taking this kind of Switzerland statesman, all are welcome approach. You could liken it to Apple has their own stores, and there are little mini stores inside Best Buy and JB Hi-Fi, right? You can buy stuff you can buy Rode mics or Shure mics on Amazon, and you can buy them on Shure.com, right? And so Uber wants to be the Amazon of everything, the Amazon of services, and I think that's a smart strategy. I think Dara is a really thoughtful coalition builder, and something that Travis really struggled with. It's just, Elon doesn't want to play nice, and Waymo thinks that they're doing pretty well with their own app and doesn't want to be on Uber all the time in all cities.
It's slightly more complicated than that, though, right? Because, like you said, this is a departure from Uber's traditional asset light model, and you have to ask yourself why. And the answer is market concentration, right? Because when you've got every individual driver owning their own car, they're largely fungible. Uber is the network, they're in control, right? You're like, oh, if one driver withdraws their services, we have another 100 drivers happy to take their place. The problem is, what happens if Waymo want to withdraw their services? There isn't really anyone to take their place. I think Uber would have been much happier in a world where there were 10, 20, 30 providers of autonomous vehicle fleets. Then they wouldn't be doing this. They're doing this because they really, at the moment, only have one option for partnering, and that's Waymo. And that means that the leverage is on Waymo's side, and they don't like that. So this is an attempt to gain some of the leverage back for themselves. And that's why, as I said, I see it as a hedge. I imagine if over the next few years, the autonomous vehicle world becomes less rarefied and we get all of these competitors, this partnership and this whole model will quietly go away.
It's a hedge in the sense that they do not have a competitor to Waymo that is viable yet, and they may be expected to have one. So they expected the other players to move a little quicker, and they thought they could play them off each other. But also, it's to continue the Amazon analogy, Amazon also has Amazon Basics, right? And they have their first party fleet, if you will, of products that make sense for them, so they can iterate, they can learn, they can innovate, they can proof of concepts. I used to be a purist in this world where I thought if you're the developer platform, you shouldn't have the application layer. It's cannibalistic to your partners. And then I saw, Microsoft Surface and Google Pixel, and I was like, oh yeah, you actually have to set the bar and demonstrate to your partners how this stuff actually works. I think even in a world where there are multiple players, many of them competing against each other for inventory and placement on Uber probably still needs to know how to operate these first-party vehicles and modify them and add extra APIs to them and prove to their partners, like, this is how you do it and how you do it well. But I do think in the short term, they need to do this. They need to do this, and they do need to do it for all the reasons you said. Travis would always say, in the existential question of like, are we going to go fire all the drivers and put them out of work? He would always say, guys, there's so much demand. There will always be drivers for all the foreseeable future. The drivers are a huge part of the network. And at best, we can start to take some of the baseline load with automation, which will drive down the overall cost to operate the network. But we will always need drivers, especially in peak times. And so you're absolutely right on those economics. We've talked about that on the show a few times. Surge pricing wasn't so much the mechanism for doing that. Surge pricing was the mechanism for the feedback loop from the marketplace. It was a signal to the drivers and an incitement to the drivers to get on the road at the right time. But the idea of a hybrid network with drivers and autonomy has been part of the story at Uber since I was there, I should say. It's just taken a lot longer to play out.
My point with surge pricing is that you will always need an elastic fleet, and you can only have an elastic fleet when you basically have this traditional ride-sharing model where the cars are used for other things at other times. You don't own them, and you can pull them in when you need them.
I actually just posted about this on my newsletter, the idea that an app is not a business, and taxis thought that the thing that Uber was doing that was killing them was having an app, and they just launched an app, and taxis wondered why it wasn't working. The innovation of Uber, as we're all saying today, Yaniv, is the entire business model is different. And one of the ways it's different is that it was asset light and the drivers weren't on payroll. And so that it was an elastic supply. And that was a huge difference from taxi and allowed them to compete in a way that taxi could never compete. And so it was a very, very, very valuable dynamic. So that's our thoughts on Uber, Waymo, Tesla, and the new deal between Nuro, Lucid, and Uber. What do you guys think? Do you think Uber is in a really strong position, or Waymo and Tesla ultimately are going to win the day? Let us know your thoughts down in the comments. All right, our next topic today is about OpenAI launching ChatGPT Agent. And boy, oh boy, do these guys really struggle with product naming, product marketing. Here's the story. So OpenAI had two products in the wild that were pretty interesting, ChatGPT Operator and ChatGPT Deep Research. They were both agents of a kind. So ChatGPT Operator could fire up a real web browser, a visual browser, navigate the web, click on things, and take action for you. And ChatGPT Deep Research had a text-only browser in the background, a kind of headless text browser. And it was really good at kind of loading up pages, indexing them, crawling them, and then ultimately collecting information and summarizing it for you. And what they realized was that people want to do both things at the same time, or there are many use cases that require both deeply researching something and then taking action. And so what they've done is they've created a hybrid product that does the best of both of these things. And they've called it ChatGPT Agent. And so this agent can go off and do a bunch of research using the headless browser. And then when it's ready to take action, if the task you've given it involves action, it can also spin up a real browser, or a browser that renders the world as we see it, and click on things and take action for you. I think this is very, very interesting, very, very powerful potentially, but it's a very confused product line with a lot of interesting quirks. But Yaniv, what do you make of this? And did you get a chance to see the announcement? And were you excited by it?
It's funny. I wasn't that excited about it, and I'm trying to figure out why. I think it's to do with the fact that this term agent gets thrown around a lot. This is certainly not the first company that is putting out an LLM-based agent. And so far, I feel that they've not entered a world of full, deep utility, right? And here's the way I maybe think about it, Chris, is that LLMs still have some reliability issues, right? And so when you think about where am I very comfortable using LLMs, it is in cases that are read-only, right? In other words, when they are not making any changes out in the world. So sure, you have a chatbot or something like deep research. I do believe, as you pointed out, is very much an agent in a real sense. It is going out to the world and doing something for you, but that something doesn't change your relationship to the outside world, right? All it is doing is gathering information. It is read-only. It is non-destructive, put it that way, right? Whereas anything where a chatbot or an LLM is actually changing the world, well, shit can go pretty wrong, right, Chris? And so like either you don't do it, or if I think about AI coding agents, generally, if you just let it loose on your code base, that's not a good idea, right? Either you need to be able to see the work that it does, or some of these agents now generate pull requests. So in other words, you still see the code they write before it goes into your code base. If you don't do that, like every day on Twitter, there's a fun new like viral post where someone's like, oh, my LLM agent accidentally deleted my database and now I'm fucked, right? So that's the sort of stuff where I'm like, I'm not sure I trust an agent to go out into the world and do stuff for me that changes the world. And so, yeah, I haven't felt a strong inclination to try any of these things because I'm like, I don't think they'll save me time. I'll either have to supervise them closely or take the risk that they'll do something really stupid on my behalf. And I'm just not comfortable doing that yet. So, look, is this the future? Yes, for sure. I'm confident that it is, but it feels that these non-read-only agents are not ready yet.
You mentioned you're happy for it to make decisions, but you're not happy for it to take actions. I mean, decisions can be pretty damn disastrous too if they're done poorly, and if you put them at the heart of your business or the heart of your personal life. I'll talk about a couple of things that I learned during this announcement. Some are positive and some I think are negative. The first is it can ask questions before it executes for you, so it can stop and give you a chance to intervene. Similar to the way that deep research does, but they were quick to point out and almost sort of self-effacing about this, that it doesn't always ask clarifying questions. It only asks clarifying questions if it absolutely needs to, unlike deep research where it always asks sort of sometimes inane questions. You can add instructions as it's working, which is very cool. You can sit there watching the browser operate and stuff, but you can like send it more messages and it will update its path through the world, which I thought was really cool. Those are great features. But, if you've been listening to this show for a while, you've heard me increase in skepticism and disillusionment with these LLMs ever so slightly. Like yesterday I was talking to ChatGPT, and I mean that literally with like voice mode, and it was frustrating me and I couldn't quite figure out why. And then I realized, it's making a lot of assumptions and just giving me a lot of platitudes back. And I said to it, you know what? I want you to ask me a question at the end of each response. I want you to dig deeper. And it did that for one message. And then the next message, it went back to giving me a platitude. And I'm like, no, you're screwing up. I want you to ask me a question at the end of every message. And it asked me a question. And then the next message, it forgot to ask me a question. And this is just a very, very simple example of how it's very bad at following instructions and maintaining even the simplest of context. And this is 4.0, right? I mean, this is the best they got in terms of this, the day-to-day reasoning engine or the day-to-day, LLM. I'm just seeing it act like a potato a lot more than I thought I did in the past. And I would say ChatGPT and OpenAI have two major existential problems ahead of them right now. Number one, it's a product and product marketing problem. I think their product team or their product leadership is really weak. And I think people listening to this would be quite surprised for me to say that. They do not have a disciplined roadmap where it feels like things are laddering up very, very well. For them to launch, operator and deep research and agent and keep all three in the wild at the same time, along with 4.0 and 4.0 mini and 3.0, it's like, you guys don't know what you're doing on the product side. I'm sorry. And then the second problem they have, an existential problem, is that they seem to be approaching diminishing returns with these models. They're really, really, really smart, but really fucking stupid. And I don't, Chris from 3 to 6 months ago would be like, oh, this is the dumbest they're ever going to be, and you just wait and see how the exponentials on top of exponentials. I don't know, Yaniv. This has been like this for a while, and it's kind of it's showing to me some of the cracks. I'm not saying these are insurmountable problems. I'm saying they're existential, and they're serious, and they're going to need to find a way over those two problems.
Look, I'm less pessimistic than you. I think I don't know. Like, everyone has their own experience, and I think that's an interesting problem for these tools, right? Because they present the same simple interface, but actually behind the curtain, these tools are constantly changing, and so it's actually very hard to get a consistent sense of how good they are and comparing that with other people and across models and so on. So, for example, at the time of recording, I find that Claude is actually working incredibly well and is a more reliable tool than ChatGPT. That's not how it shows up in the benchmarks. I don't know if it's the same as other people's experiences. I don't even know if my perception is valid for my own use case. I just know that's how it feels. And so there's a lot of the sense of like, that's a marketing problem in itself, because people base their tool use based on how it feels, and how it feels changes over time. So, that's one issue. I think that I've learned what I can use these tools for and get immense value out of them, and where they're not there yet. So at some level, I agree with you though, Chris. And that's what I was saying is, I don't trust these tools enough yet to go do things out in the world without me riding their shoulder. And if what they're doing is like navigating a website and I have to ride their shoulder, I'd rather just navigate the website myself.
Yeah, that's part. Actually, it's a really good point. And part of the time, it feels like you're micromanaging a junior, operator of some kind, without any common sense. And it certainly feels like that when I'm using, Lovable or Bolt, a friend of the pod, who's a CEO, was on the show. And it's like, what are you doing? You're like, sometimes you seem like a genius, and sometimes you seem like an idiot playing with your poop in the sandbox. And like, I can't get work done that way. You are, really a flaky colleague. So sometimes it just feels like I'm just going to do this myself, and I'll give you very, very limited tasks. When I'll ask you to review some content, and even then you fuck it up and I have to go and re-edit the thing. So, this may be a little bit of, this horizon, this technology horizon, the better it gets, the more we expect, and so on. This might be, it might be my instructions. I've got a very long set of instructions in there that might be overriding the baseline system message that's getting in my way, and I should just reset to 0. It could be user error. It just could be easily solved in the next update. We'll see what happens.
Like all people, I like to quote myself, like all people of modesty and intelligence. There's actually, I posted something on LinkedIn a couple of weeks ago, which I feel is apropos. I wrote, what happens when hundreds of millions of deeply knowledgeable, mildly psychotic, passively intelligent, incredibly fast, benignly sociopathic, stunningly hardworking, somewhat neurodivergent workers show up on the world's doorstep, willing to work for below minimum wage? We're about to find out. And I think everything you're saying here is, it's like, these things are amazing, but they have these quirks that make it hard to completely rely on them. They're both very smart and not very smart. They're both emotionally intelligent and emotionally very stupid. And the question is, how do you thread the line between all of those things?
All right, those are our thoughts about ChatGPT Agent. What do you guys think? Is it brilliant? Is it a great fusion of your favorite tools, operator and deep research? Or is it yet another product from ChatGPT and OpenAI that's hard to understand, hard to use, and is really showing the edges of the cracks in the wall? Let us know your thoughts down in the comments.
All the best .coms are taken or crazily overpriced, so you settle on a workaround domain for your website. Don't compromise. Get a clean, sharp .tech domain that instantly says, this is a tech startup. Grab yours at get.tech/TSP for the Startup Podcast or via domain registrars like GoDaddy. Now, Chris, the next thing I wanted to talk about is actually something that was posted last week by a departing employee, a real deep dive on OpenAI's culture. And I think actually some of the things we were just talking about in the previous segment, talking about, for example, OpenAI's confusing product lineup, very much speak to the culture here. So I thought I'd sort of go through at a high level some of the key learnings about how OpenAI works on the inside, one of the most influential companies in the world. How does it actually work? And so, yeah, I just thought I'd go through this. So let's jump in. The first thing that he said is that you have to remember that this thing is growing insanely fast. So in the year he was there, it grew from 1,000 to 3,000 people. It's a company that changed direction very quickly based on new information. And he said that everything breaks when you grow that quickly, but the company maintains agility. I think that's just really important to remember. It's tripled in a year. And what happens when you triple the size of an organization in 1 year? I can tell you what happens. You get chaos. And so what you're actually thinking about with OpenAI, when you think of a company that grows as quickly, is it is extremely chaotic. Combined with the next couple of things, I think it starts to paint a picture that actually reminds me a bit of early-ish Google when I was there, right? A couple of other things he said. It's bottoms up and meritocratic. In other words, good ideas can come from anywhere and you can just try them. You kind of get permission just to do these things. Best ideas win regardless of politics or presentation skills. 3, strong bias to action. You can just do things. Multiple teams are often doing overlapping work. They work on similar ideas independently. Apparently, this guy worked on Codex, which is another agent by OpenAI. This is their coding agent. And he said there were actually a couple of other teams that were working on something really similar. And then once their version got the momentum, the teams kind of coalesced around it. So again, what you're seeing here is this kind of bottom-up organized chaos. He mentioned that there was a very strong meta to OpenAI pipeline. But like I said, to me, it reminds me a bit of early Google. And of course, early Facebook had a very strong Google to Facebook pipeline. So it's actually, that's the lineage, right? It's this sort of Google, Facebook, bottom up, let 1,000 flowers bloom, just do things, hire lots of really smart people and get them working on whatever they like, move fast and break things sort of model, right, Chris? And that has a lot of upsides, right? This person, Calvin, is saying he's impressed at how quickly stuff gets done. But it also means you feel a lack of coordination in the product lineup. A lot of stuff gets built and shipped. It doesn't really fit together. Stuff maybe also gets abandoned from time to time because the team that built it just kind of loses interest or whatnot. And so that's what you're seeing. That's why we have like 4.0 and 0.1 and 0.3, 4.1 and all of these different things, and why we have ChatGPT Agent and Deep Research and Operator and Codex and all of these other things, right, Chris? It's because what's actually happening on the inside culturally is we've got 3,000 people, 2,000 of whom have joined the company in the past 12 months, just working on whatever it is that they feel is a smart thing to work on.
I mean, this also reminds me of Uber when I was there. It was a massive hyper growth. It grew from, I think, 3,000 to 25,000 while I was there. 50% of my job was interviewing and hiring people. It was absolute chaos and it was exhilarating. Yes, there were a lot of duplicative efforts, especially between the US and China. The China team was building a lot of China versions of everything. The best thing you could say about that, and I mean this sincerely, is it was a marketplace of ideas, right? There were people building multiple services and multiple features, and the best version won often, or the best version naturally became more popular over time. And that was pretty interesting. And it was one of the key cultural values was let builders build. It was get out of their way and let them build stuff. But at the end of the day, the product did suffer from a lack of cohesion, and I think that's happening at OpenAI.
Mm-hmm.
And ultimately, I think this is a weakness in just good product leadership. The chief product officer is from Twitter, and Twitter, say what you will about X is a disaster, but Twitter really didn't have great product leadership. They spent a lot of time doing not a lot. It was sort of, Twitter was the product that the company couldn't kill despite its best efforts. And even now, Elon's trying to kill it. And it still won't die because of its powerful network effects. And so, in the early days, OpenAI seemed to be populated almost exclusively, or at least majority by Uber people. And now it's populated exhaustively by Twitter people. I don't think that latter approach is going to be necessarily the way to go. They're going to have to develop a strong, cohesive product vision. They're going to need to have some hypothesis about how the world is headed and how their various efforts fit into that world, even if it is a rough lattice. And they're going to need to rationalize those models, even if it's just through some kind of query router underneath, and there is a range or a suite of models under the hood. They're going to just have to do that work. They can't sort of throw up their hands and rely on hypergrowth to get them out of all the problems. At some point, this cognitive, architectural, conceptual, engineering debt, technical debt is going to bite them in the ass, and they're going to start dealing with it sooner rather than later.
I'm struggling here because I both agree and disagree with you, Chris. Like, yeah, I don't have an opinion on the strength of their product leadership. It could perhaps be stronger, but I actually feel that when you are growing this fast, you have a trade-off to make, right? And that trade-off is very much between overall velocity and cohesion. There is no way you can grow from 1,000 to 3,000 people, maintain a well-aligned product vision, and have all of those people be productive. It doesn't work, right? So when you're in this hyper growth, again, it's actually a well-worn model, right? Google, Facebook, Uber, many other of Silicon Valley's giants have followed this approach, where it's like, you know what, we're just going to hire a bunch of smart people. We're going to do a bunch of shit, and the product managers are going to just kind of have to juggle all of that. But even if good product management is happening, it's happening at a lower level. And that high level product leadership is just like, there's no way to actually herd all of these cats, right? You're going to have a messy product portfolio. And the job, I guess, is, to your point, not to accumulate too much product debt, and at some point to start digging your way out of it. But I think that's a point at which you've already reached a certain level of maturity. But again, I think Google, which I always have said didn't have strong product leadership, so this is where I'm very much agreeing with you, is also the company that is most notorious for having a messy product portfolio, for launching things and then losing interest and killing them, for failing to take advantage of massive opportunities, for having great overlap between similar products that are all in its portfolio. And yeah, I think they've always had difficulty coming to terms with consolidating their products and getting a great deal of cohesion. Ultimately, what I'd say, Chris, is it's a trade-off, right? And this is where they are on this trade-off surface.
Yeah, there is a trade-off between let 1,000 flowers bloom and hope that some of those flowers are extremely exciting innovation that become, really, really valuable. And to the other side, which is a well-tended, well-curated garden with intent. And it's true at the beginning of a hyperscaler's life, you want to tend towards the former because you're not quite sure where you're going to end up. And then at some point, you can understand the general shape of the landscape and move closer towards the latter. I do think, though, there is a way to provide a lattice on top of which these 1,000 flowers that are blooming can be shaped in some cohesive, more intentional way. And it feels like to me that there is the lattice at OpenAI right now is a little anemic, just a little, and it is creating unnecessary inefficiency and confusion in a very, very high stakes game. Even if you look at Claude and you look at some of those other companies, they're actually doing quite a bit better at that. And they're not scaling as fast as OpenAI is, no doubt, but there is more that can be done from the very top to provide just a little bit more structure, which I think will have more efficiency and better outcomes. That's something that's missing.
All right, so there are a couple of other cultural attributes here, Chris, that I think actually build on the reason for this product chaos, right? And they might not be obviously so. So the first is that they are, and to quote the article, frighteningly ambitious. This person said, OpenAI is perhaps the most frighteningly ambitious org I've ever seen. And they want to compete across multiple arenas simultaneously. They're not satisfied with just having a top consumer app. They want to own all sorts of stuff. And again, that reminds me of Google. one of the reasons, and maybe why the lattice is difficult to build, Chris, is when you're saying let 1,000 flowers bloom, and we want flowers everywhere, right? Like, we're not just saying we want to build in one area. Like, Google's mission was organize the world's information and make it universally accessible and useful. And internally, we took a fairly liberal interpretation of that, which means you basically get to build whatever the fuck you want. And that can be encouraged, right? Because it's bottom up. And I think similarly, OpenAI is taking a leaf out of that book. At least Facebook had some discipline around social networking. Uber had some discipline around transportation. But I don't think OpenAI actually has even that level of guardrails, because their ambition is just like world moving. And if they pull it off, again, Google is bigger than Uber, right? But if they don't, then you end up with a lot of chaos. So that's one. And then another one, Chris, and then I'll get your response. Which is interesting. And actually now it's quite different from your Googles and your Ubers internally. But I think it makes it worse. He said they are very secretive internally. Now that reminds me of a very different type of tech company, which of course is Apple, right? Because there is so much scrutiny on OpenAI, because so much top secret stuff is happening, because there are so much attempts to steal intellectual property and poach employees, you don't really get to find out what other people in the company are doing. So there is this level of internal secrecy that I don't think exists at other tech companies, where they're actually very open internally. And so combining secrecy with these other traits, I think, is unusual, Chris, and in some ways a bit problematic.
Yeah, the secrecy is part of this cultural malaise that I'm sort of sensing from the outside, of like, people are not coordinated, and part of the lack of coordination is lack of leadership, and part of the lack of coordination is this silos and secrecy and gatekeeping type stuff. You mentioned ambition, or the article mentions ambition. Yeah, again, it reminds me of Uber in the early days. Uber was aiming to be the first trillion-dollar company. And there wasn't a deal or a vector that Travis didn't want to pursue. And we had the money to do it. We felt like we could do anything. There was just money coming out of the walls. From self-driving to Eats to Uber Business, Uber for Business, China, the developer platform. Travis didn't see, never saw a deal he didn't want to win. And I actually think that's, in the end, the thing that killed Travis. It wasn't, cancel culture or any of that stuff. It was the board saying, stop opening up threads and start shutting them down and get to break even, because we want our money back. That's what actually happened. It was a coup, right? And so the difference here, as you say, is OpenAI is chasing the biggest possible prize, replacing all intelligence everywhere. It doesn't get much bigger than that. Except maybe interstellar space travel or something. And so the ambition is going to probably be met. Sam has done a very, very good job of getting people very, very hyped about this. Not the least of which through saying it's dangerous and you need to regulate us. Saying something is dangerous, saying something is like Prometheus, is like nuclear, is a great way of making yourself and your company very, very important, right? And so I think they're probably rightly in the center of all the conversations. They have all the money and they have all the upside in the world. And so, yeah, they should have that level of ambition. And, with a little bit of structure, a little bit more structure, I think that ambition will be, is well placed. And it will be well rewarded.
Yeah, probably. And again, I'm sorry for constantly comparing back to Google, but again, that's my personal experience. And it makes me think, I had a lot of issues with Google's style of product leadership, with the enormous amount of waste that happened at the company, and probably is still happening in terms of talent. And yet, you zoom out and you look, and Google's a $2 trillion company and is obviously, by any metric, extremely successful. And I think maybe that is actually the lesson, which is that if you're ambitious enough, and of course, if you have enough access to capital, then again, I was talking about trade-offs, Chris. Like, doing a bunch of chaotic shit that looks inefficient and stupid and like confuses your branding and so on. If what you're optimizing for is the big prize and not slowing down on that could be the smart management approach. Only time will tell. But yes, if OpenAI is a multi-trillion-dollar company and you point to them and go like, like, your product strategy is a bit weird and it doesn't make any sense, you're like, well, they're crying all the way to the bank with that poor product strategy.
Yeah, so actually, let me talk about that for a minute, because I think it's worth supporting your point. This is now, I'm playing devil's advocate to the point I was making earlier, because I'm not, to be clear, I'm not making a a definitive point. I'm not saying they need a lot more structure. I'm saying there's a spectrum. We're both saying that. And I feel like they're just a little off the right place in the spectrum. But let me make an argument for this kind of thousand flowers bloom thing for a second. When you come from Australia or you come from Europe, you really tend to believe in well-tended gardens. You tend to believe that the government should do this kind of societal planning, and it should regulate everything within an inch of its life, and it all should be, controlled, methodical, and not wasteful or involve, produce unintended consequences. And so Australian culture and companies and European culture and companies tends to optimize for controlled outcomes. The US really, really believes in the free market, or at least not the free market, but it believes in chaos and competition. It believes in creative destruction, in aggression, in people competing to win. And, even Silicon Valley is operated that way. And so you'll often hear, in Australia or in Europe, we've got to create Silicon Valley. And if we all just could sit in a room and coordinate better, you hear this a lot in Australia. It's like, if we could just coordinate our efforts better. And I'm always reminding people, like, Silicon Valley is not coordinated. No one coordinates Silicon Valley. It is a giant, chaotic mess of aligned incentives and commercial interests. And so, just as an argument for this chaotic mess producing really great outcomes, both inside the companies and in the ecosystem of the Bay Area, I think most of the world needs to actually lean more into the competition of ideas and the chaos and the incentive-based execution than they currently do.
I just wanted to return to the article one more time. There's a bunch of stuff in there that I'd say is fairly standard Silicon Valley hypergrowth stuff that I won't focus on, but there is one thing that really caught my eye, and that's this quote. Nearly everything is a rounding error compared to GPU cost. Wow. So we talked earlier on, Chris, about Uber being an asset-light business. OpenAI is anything but an asset-light business. And I think that also leads you to understand some of their thought processes and some of their decisions, right? And even like the discussions lately about engineers and researchers being paid tens of millions, maybe $100 million to work there. When you have this enormous capital expense, right? These GPUs, what you are spending billions and billions of dollars on, the amount of capital that OpenAI is burning, or at least putting into CapEx to fire off these GPUs to power all of the AI, that is actually, in a sense, the guiding principle behind a lot of the things that get done, right? Everything else is a small gnat on the back of this elephant, which is GPU cost. And so you can see that, oh, okay, like building a bunch of different products that involve a bunch of people and, might confuse the brand. It's like, well, that's nothing, because look how much we're spending on GPUs. Hiring these people and not putting them to good use. Well, that's nothing, because look how much GPUs cost. And so I just think that's really a fascinating thing where you sort of think about the theory of constraints. And if your constraint is GPU cost, that will drive a lot of your strategy in ways that are maybe not visible to the outside world.
Yeah, I mean, the main constraints, Sam Altman's been saying this for a few years now. It's the main constraints are power, data, and compute. And they need to solve those three things. And it seems like the other constraint is high quality talent who knows what they're doing. And so, a good metaphor maybe is, imagine you're at a $1 billion refinement facility. You've spent billions and billions and billions building this refinement facility. And if you stick diamonds in one end, you get, very, very valuable, jewelry at the other end, and you can sell that for a lot of money. Or you can stick rocks in one end and you get garbage at the other end. Right? They need the diamonds. They need these incredibly valuable specialist experts to stick amazing algorithms and tasks and workloads into the beginning of this refinement engine, and use these GPUs on the best possible algorithms, on the best possible ideas, because that's what will produce the massive upside on the other end. This is a massive asset they've built with these GPUs. They need to put the most high quality algorithms, the most high quality inputs in to get the most valuable outputs. And so, yeah, they can. You go mine those diamonds. You go hire those rock stars, those diamonds that are in the rough, and you put them into your system at all costs. at all costs, and it makes a whole bunch of sense. Again, if the prize is actual AGI versus diminishing returns of an LLM that doesn't know how to follow instructions, so we'll see.
Absolutely. But yeah, it did drop the scales from my eyes a bit, Chris, on these multi-million-dollar hires, right? I think I was listening to another podcast as well as reading this article, and they said that some of these training runs cost over $1 billion in terms of the GPU consumption, power, and just the sort of the depreciation on those GPUs. And it's like, if there are bugs in the training code or there are defects in the training set, that $1 billion training run can just give you cactus, right? So you are supervising this incredibly expensive work. And the technicians who can make sure that the run goes correctly, there are only a few hundred of them in the whole world, right? Who can effectively be in charge of $1 billion training run. So of course, it's worth paying a lot of money for those people who are so rare and so valuable, because the cost, on the other hand, is not just an opportunity cost, it's a cost you can quantify with dollars. And so it makes those hires much easier to justify.
Of course, we're talking about the hard costs, to say nothing of the opportunity cost of winning the race.
Exactly.
Right? The upside, as we've said multiple times on this episode, even the upside is infinite. It's infinite. If you can be the first to AGI. I mean, I don't know if everybody is truly grokking the upside. If the image that's always in my head very, very often is Rehoboam from Westworld. If you've ever seen Westworld, there is this giant spherical computer running the world. It runs everything. And the first to AGI, or the first to AGI scale, has access to this exponential outcome where the AGI can further refine itself, refine science and material science and medicine and innovation. You are a runaway freight train that is uncatchable, and you will be running the entire planet, the whole thing. That is an infinite upside, and that kind of opportunity has not existed in human history before. The closest we've come is maybe Google with information, and maybe oil with the oil companies, and those were very slow moving things that kind of only seeped into our economy very slowly. But I think intelligence and general intelligence will move much more rapidly when that moment comes.
So those are our thoughts on this memo about OpenAI's culture. What do you think? What do you learn and take away from that culture? Leave your thoughts in the comments. All right, Chris. So if people want to work with you or just follow some of your content, where can they find you?
You can learn more about me at chrissaad.com and chrissaad.com/advisory, or subscribe to my newsletter at chrissaad.com/newsletter. How about you, Yaniv?
I'm on LinkedIn trying to make it a less boring place. I love getting requests from TSP listeners, so hit me up, let me know you come from the podcast, and I will accept your request. All right, Chris, that was another great episode. Have a good one.
Catch you later. Bye-bye.
Today's episode of the Startup Podcast was brought to you by .tech domains. Naming your startup should be easy, but it isn't, because all the good .com names are taken or wildly overpriced. No more. You don't have to compromise. Your domain shows your focus and intent, so make it sharp, clean, and unmistakably tech with a .tech domain. How do you do that? Head to www.get.tech/TSP or a registrar like GoDaddy and grab your .tech domain today. Get.tech/TSP for the Startup Podcast, so they know you came from us.